Thank you. Welcome, everyone. Just to quote Rachel, it is stacked against us. I'm not talking about the macro headwinds. I'm talking about having to moderate 5 panelists with 45 minutes. Thanks for your attention. Let me go straight into the discussion, and I want to allocate some time at the end for questions and answers. Amy, maybe I'll turn to you. So Ravi acknowledged the good work that ICVCM has done over the past few months in terms of building the momentum back on carbon markets. Could you share a bit more where the progress is, and could you explain to the audience what is the rationale behind how ICVCM safeguards integrity on the supply side?
Yeah, thanks, and it's a really great pleasure to be here with many people who are also pros in the market and some people who are perhaps learning as well. You know, what we're doing in the ICVCM with the core carbon principles is trying to help create a collective global threshold around integrity so that we can scale the market where the supply is coming from independent suppliers. And you know, with the core carbon principles, that's 10 principles of fundamental quality in the carbon markets, and we have an assessment framework that we've been rolling out since 2023, where we assess carbon crediting programs, so the standards, the protocols, the registries that, as they get called in different places. We assess them for the way they govern and run registries and their own systems and how transparent they are and how they deal with validation and verification. And then we assess methodologies, so the way you count carbon in projects through an assessment process, you know, which is stakeholder engaged. So the rule base was built through a stakeholder consultation process, and the assessment process has used expert stakeholders to go through that process collectively as a collective endeavor of the whole market. And where we are now at is that we're starting to get through the main parts of that assessment process, and we're starting to move from looking back into the market to existed volume out towards now new methodologies and new types of asset class, new types of carbon. And what we're really seeing is the market has moved. The programs have changed their rules. Methodologies are being designed now with the core carbon principles in mind. And while we're still assessing, we're seeing the market move as everyone engages in this collective endeavor to create a scalable, investable, trustworthy market. So that's what we're doing right now. And you know, a lot of the people and the faces I see in the room know, because they've helped us in the work of assessment and in the work of submission of information.
Great start, thank you. Market has moved, as you mentioned. I want to turn over to Scobie. Could you share a bit more about the work that Imperative does? And do you observe the market moving, and is it moving to a certain type, removals, reductions?
Yeah, thank you. And thanks for having us here. I mean, it's spectacular to have everyone in the room, even if it's not in the best market conditions. So the market definitely has moved. I'd say just most recently, the Trump administration coming back in, we've really seen a bit of a risk-off stance from the developer perspective. So where we had capital providers previously in the market that were interested and willing to take directional price risk on carbon, I think we're seeing that slide backwards a bit. So more people requiring offtake, which draws us to, into sort of closer reliance on the big tech companies, really, that are writing that well-priced offtake that is able to support things like native species ecosystem regeneration, which we do. We are really focused on bringing an infrastructure grade of quality to the market. I think everyone along the supply chain has a role to play in up-tiering the market, and the work of ICVCM has been critical in doing that, the work of other players around the ecosystem. For us, we're trying to do what we can and really approach these in a way that is equivalent to how you would see other major projects done in other sectors of the economy. So you think about a power station or a toll road or a power plant or other assets. We have to bring the same sort of rigor, discipline, dependability and professionalism to this asset class that we see in those other developed asset classes if we want to crowd in institutional capital. We are not going to succeed in scaling this market unless we get both the development of these projects right and the ongoing operation of them, because I think, as Tom said, these are long-lived assets. And so we have to think about these like we think about other physical asset classes. And when I talk about asset management, I'm not talking about financial asset management. I'm talking about actually being on the ground and managing these assets so that year on year, you know that the quality of the ton you're getting out represents, as Ravi said in the last panel, a real ton of carbon. And so I think for us, and you know, we're hoping to sort of, through our projects, show what good looks like. But that is one of the challenges at the moment in the market, is we're still working through the asymmetry of risk that buyers are facing in terms of, you know, a lot of reputational downside and not much upside. If you look at what's just happened to Apple in the US, they, you know, I mean, by most rational standards, they did everything they could. They applied the mitigation hierarchy. They decarbonized 75% of the absolute emissions associated with Apple Watch, and then they used offsets, the credits to offset the residuals, and then now they're being litigated. So in that sort of environment, we have companies that are really trying to do the right thing and are still falling foul of some of this reputational challenge. Okay. It's a hard time to be a buyer. So, yeah.
I mean, let's park that demand side for a bit. And I think Mark is probably sitting on his edge right now. Can you, is it right that you focus more on native restoration? So that means removals native species. So let's also park that, because there's this ongoing debate around removals and reductions. And you are essentially reflecting your project origination based on where you see the demand is, correct? Perumal. So for those who actually sat through the Ecosparity fireside chat between me and Amy, I introduced her as the architect of Article 6, but Perumal is the engineer of Article 6, right? So he's behind the scenes and he's now taken the lead on Article 6. Congratulations on finally nailing down the rules in Bakker. Now we have to wait up to 2028 for the review. Here's probably a slightly more controversial question. Also, congratulations on 6.4 being open for business. Why is Article 6.4? Why Perumal Arumugam crediting, Paris Agreement crediting mechanism? And if I can be a bit more controversial, how does it stack up against some of the other independent standards out there? Why should buyers look towards 6.4?
Exactly for the reason that you said initially on the name of the crediting mechanism. Not necessarily. I would say like 6 pointers on why the Paris Agreement crediting mechanism would be the one that is needed in today's market situation. And I take some 3 points from Ravi, Rachel, and also Tom in terms of responding that where PACM stands in terms of how it delivers of what it delivers to the market. Oftentimes that Article 6 is considered to be something that's essential to be there, to be in. I would always consider Article 6 as a salt in any meal. It's needed in order for everyone to be having a tasty meal on the market, but not more, not less, to be there. And the first and the foremost of the 6 is the multilateral governance. And I think one cannot deny the fact that any standards, you always have to look forward for someone to complain for, and you have the PACM now, where it's a multilateral standard that's going to be, or the governance system that is being for parties, that's been elected by parties. So you have the representation of 190 plus countries that are providing an issuance of credit or approving a standard or approving an activity. That you will not be finding. The second, I think, Ravi talked about the resilience and where the resilience has to go in. The PACM mechanism has an inbuilt mechanism by which, through 3 means, it's actually contributing towards the adaptation. So we are not just talking about reductions or removals addressing only mitigation. It's actually channeling for the most vulnerable to get benefit out of. There are countries that are the most vulnerable may not be the ones which has the mitigation potential. And they need to get the necessary financing going towards addressing their vulnerabilities. And this mechanism provides that pathway, and it's under the multilateral system where how this is being diverted to. So those are the 3 3 channels of finance. Then we talked about, is there the clear, in the previous panel, we talked about the issue related to policy, regulation, and the finance, right? The most clarity for a private sector or anybody to act to see that we also heard something about the legitimization or legislation of the credits. So that's happening that I was hearing some people in the morning saying that when we went to the country and talked to them, they say that actually, do you know you have 20 projects in your country? And they get to hear that there are 80 projects in their country, right? So how do you legitimize the Article 6 mechanism? Not a single activity will be able to be registered without an approval. It's not necessarily accounting. Oftentimes, Article 6, when you say Article 6 compliance, voluntary markets, let's not forget Article 6 will also be a major role playing mechanism in the voluntary market going forward as mitigation contribution units. So the involvement of the host party, and as part of the participation requirement under the PACM mechanism, it's a requirement for the host party to list and identify the activities that they would approve as an activity under Article 6.4. That provides the legal certainty for any investor to go into the country to look at the activity types, the sectors in which that they would be engaging, not necessarily for authorization, and that's where we talk about whether they are compliance or non-compliance. And then I think the PACM standards, like work under the principle, like I think we had some question about what is actually Paris aligned. What is Paris aligned is that any baseline that is being developed under a carbon market mechanism has to align to the respective countries' LNDCs, LTLEDs, and the long-term goals of the Paris Agreement, right? So that's the foundational requirement. And every single standard that will be developed under the PACM through what parties have decided will be delivered in accordance with what is being laid out as these three things, and this is being evaluated. So I would see not as the KPIs as how many new Article 6.4 activities is being implemented on ground is not the success of the mechanism under Paris, and that's where I think Rachel is not in room. So she said that UN acts as a guardrail or setting up of the expectations related to how the integrity can be ensured. And that guardrail is the standards in which the PACM will be influencing the peers and influencing the influencers in the market who are working on standards to deliver these high quality integrity carbon credits. And that's the fourth one I think that the PACM mechanism would be providing. The fifth one, you talked about reductions, removals, and then tech-based systems, nature-based solutions, and I can say that this is one mechanism where you are not talking about a bilateral arrangement between A and B. You are basically cooperating with a multilateral mechanism whereby you as an investor or you as an activity participant, once you engage, the scope of your credits being used by different actors gets magnified. So that's where I believe the fifth major element of why PACM in terms of they are scale agnostic, technology agnostic, and region agnostic in comparison to some things that might be there on the other count. And the last one, I believe that the MCUs are going to be one of the channels which will be talked about. I think somebody asked, I think Mandy asked that, do you actually know how the trillion looks like? And I think carbon markets and Article 6 MCUs in particular, and I'm looking forward to one of the questions which went to Ravi and Rachel of what you are looking at COP30. I'm sure that there is going to be some developments towards how the MCUs within the Article 6 can be incentivized. And that's where I think a lot of voluntary and corporate actions that will stand out as Article 6 or PACM in the market.
Thank you. 6 points actually, right? But I just want to quickly recap. I think PACM 6.4 mechanism, both Article 6 compliance and voluntary, both reductions, removals, tech and nature. Keep that in mind because I think that's important for the market to scale. Chandra, let's turn to you. Now, amid the global headwinds and the recent geopolitical developments, does the World Bank see the risk of climate-related ambition backsliding? And in this environment, maybe you could share how the World Bank is working to maintain momentum, right? Strengthen demand signals, and also provide that regulatory support to establish carbon markets and scale carbon markets.
Thanks, Anshari, and thanks for the invitation to talk to all the very seasoned audience in carbon market. Looking around, it is a little overwhelming to see that the presence of so many people with so much expertise. So first of all, I would like to start by saying that there are building favorable tailwinds to the political headwinds that is in the newspapers every day. And let me talk about a few which complements the work that Singapore and UK and Kenya are doing in terms of giving a positive signal to the market by reports coming out of France, reports coming out of Germany, which have not been very active supporters of carbon market in the past, putting forward their own thinking around the use of the carbon markets. That's one of the important ones. So now the coalition of the working, I think I heard somebody say, includes not just UK, Singapore, Japan, Korea, but potentially includes other countries which would hopefully open up the biggest market that all of us in the carbon market want, which is the European climate policy, should recognize the contribution of the carbon market to the flexibility in meeting the long-term climate goals. That's the first part. The second favorable tailwinds are, you look at all major emerging economies now have carbon pricing instruments, carbon tax, emission trading system with flexibility built in of crediting instruments. So China has had it for a long time. Korea has had it for a long time. Now it is in place in India. Brazil is putting it in place. Turkey is putting it in place. South Africa has a tax with an offset. Indonesia is looking at it. Vietnam is looking. The list goes on. The point to make is that international carbon markets are not now just about developing countries accessing the European markets or a few Japanese buyers or going into the Korean ETS. It is taking ground and it's taking root. It is going to go deep, and that's where I think the potential in the long term lies. So what is the World Bank doing in this context? We support over 30 countries, all of the ones that I listed, the major emerging economies, in the design of their carbon pricing instruments with the flexibility instruments building, the crediting instruments built in, and talk about how different parts of this market interact. The Article 6 mechanism, 6.2, their domestic crediting instrument versus voluntary use. These are complex policy decisions that many of our client countries with very limited capacity have to make. So how do we do this? Last year, when we put out the state and trends, we found that the proliferation of capacity building programs had become a problem, not the solution. That there were contradictory messages that different capacity building providers were providing on how you should move forward with a positive list versus corresponding adjustment versus pricing for it. So we started working with a whole range of partners, many of you in this room, ICVCM, VCMI, UNFCCC, the Article 6 Implementation Partnership, GGGI, UNDP, you name it. And in 6 months, we've been able to come together as a coalition with a guidance on how do you frame the engagement in carbon markets in the broader context of carbon pricing. And we will release this at the Innovate for Climate together. And we are hoping in this process we identify gaps in some areas in which honest friends don't agree on everything. So we'll figure out what are the areas in which we need to work together in order to create the regulatory environment, the legislative framework, the capacity in developing countries which are essential for the growth of the market. Right now, we are all struggling with trying to identify demand, but going forward, we need to have clarity around the host countries and what they should be doing and how they should recognize the 80 projects that they never knew about, how should they give comfort to the private sector. So we will implement this together with all the partners through our partnership for market implementation, and over time, hope that we are more focused and coherent and consistent in our messaging on building institutions and policies, frameworks that will allow the market to grow.
Thanks, and good luck. Peter, so we spoke about momentum, including from private sector, and Mandy in her keynote spoke about financing. There is a perception that, at least from the business community, there's a bit of a retreat from carbon markets. Is this what you observe, or is it more that there's actually capital flowing, there's action coming in? It's just that corporates are not evangelizing these efforts.
Yeah, Chandra made me really nervous by saying this is a seasoned audience in carbon markets, so I'll volunteer. I am not that specialist. I represent business, and I can give you my views. It's the third time today that somebody is asking me about companies backtracking. So that might be the perception in this part of the world. And I know there's a few poorly PR'd examples of companies that are perceived to do that, but I interpret that differently. I think the era of commitments is behind us. We're now in the era of implementation. We move from commitments, from promises to execution. And that is what I see in all the companies we work with. I represent the World Business Council, 250 of the largest companies in the world. Significantly more than 20% of all emissions in the world are in the scope 1, 2, 3 in those companies. And they have all agreed for this year and the coming years, the main priority is accelerate decarbonization in value chains. And that's a significant development that I would say, because in that more than 20% of emissions, 88% is scope 3 emissions, i.e. upstream, downstream, value chain emissions. Companies are relatively good at reducing scope 1, 2, various levels of professionalism in it. Scope 3, relatively poor. Partially, there is no data. So today, this morning actually, together with the Singapore Business Forum, we have signed a memorandum of understanding that has made scope 3 product carbon footprint the norm in the carbon registry here in Singapore, making a significant step forward, providing product level footprints to businesses. That will lead to much better decisions. So what I see happen at the moment is the shift is away from can we set more ambitious targets to what is the corporate strategy, or in the speak of sustainability people, the transition plan that we need to have, and through frameworks like ISSB, be forced to then disclose. And what is the accountability mechanism behind that to show that we're actually going to make the progress that those plans have integrated. So I'm expecting, and I see it in the membership, which is again, significant part of the global emissions, full commitment, and I see no difference whether it's US-based companies, Europe or Asia. Everywhere the commitment remains the same. The willingness to speak about it changes a bit depending on where the head office is, but the commitment stays there. So it's a matter of now really looking at action. I think when it comes to carbon markets, I probably at best can claim to be having some views on the demand side of it. And the demand side is super simple. If there's no trust in the market, there will be no flow of investment into that market. If there is, either because of lack of integrity or because of lack of recognition of those investments, and obviously the noise around SBTI has not been very helpful in getting clarity on that recognition, the demand side will not develop. There's positives as well. There's now a growing base of data that suggests that the companies that have been first movers in carbon markets on the demand side are also much faster reducing their emissions in the parts where they have control. But I think for the market to work from a demand perspective, trust in the market needs to be restored.
And trust, I think in terms of confidence in the supply quality, ICVCM 6.4, and even the standards themselves, Vera, Gold Standard, and others, they've kind of reviewed methodologies. So I think there is evidence, and this comes from the ratings firms, to show that supply has improved over time. Now that then begs the question, how then do we deal with the demand, right? So Peter, you mentioned you're not from the carbon side, right? There's so many acronyms, Bakker, ICVCM, VCMI, right? 6.2, 6.4 and whatnot. Now, there are three terminologies on the demand side in the voluntary carbon market today: offsetting, compensation, contribution, right? And there is a nuance to each of them. Now, if we can have a bit more assurance on the supply side that 1 ton of CO2 is abated, whether it's removed or reduced, right? Could we just simplify things and say corporates can actually use these credits towards their target? Do you think that will fix the demand? And I'll open this up to the panelists, because I think there's quite a lot of insights to draw, including from the parallels you can draw with Article 6 itself and how countries are dealing with this, right? And after this round of conversation, I'll go into the Q&A. So please drop your questions on the pigeonhole. So maybe, yep, I'll open up. Amy.
Yeah, and I think that's the point to make, right? I mean, you know, Article 6, when we were working on Article 6, and Perumal still is, and we applaud him for his tenacity, when just getting governments into that space of consensus was around getting governments to say they will act, and how they act is in line with a reporting framework and a transparency framework, and setting a quantified curve towards their single-year targets and spacing that out over a couple of years for the NDC. And we basically were saying a lot of ands, right? And we were saying you can do this and this and this, you can do removals, you can do reductions, you can do tech, you can do nature. And when you bring those credits to look at whether you've achieved your NDC, you can say, here was my emissions balance, here was what I committed to do, and here's how I've met it with those credits, right? So we gave countries, the collective global community gave themselves the right to work together to set up pathways that they could transparently report on and achieve. And so they, saying in that space of stepping into ambition with their NDCs, they recognize the diversity of the economies, the diversity of the means to act, and the need to create space around, setting ambitious targets, but doing it in a nationally appropriate way. And one of the challenges we have in the corporate world is being able to have a conversation about what is the right pathway for a sector and a corporate in any given economy, in any given country. How are subsidies, incentives playing into that? And how is, the reality of their business plan, and their decarbonization plan? And I think we all need to be really cognizant that at global level, the consensus was there are many ways to do this, right? And when you use a credit, you use it, and Article 6 doesn't talk about offsetting, but you're using the credit against a ton, right? And so there is this, there's that higher level comfort with a huge degree of flexibility with transparency and ambition and decarbonization and use of carbon markets. And I think, our challenge is, can we start to understand that in the corporate space when we're helping people with high integrity carbon markets that support highly credible, highly ambitious decarbonization pathways set by companies knowing how to get their business in that direction.
Great. Perumal, are you going to also explain how the contributions term came about in Article 6?
It's like to see Amy, you and me. It reminds me of Katowice COP. No, I think one of the things I think what we have to look at is that what claims or contribution that we are asking for, where does the problem comes from, right? I completely subscribe to what Amy said in terms of as long as that the companies can provide the necessary transparency and clarity on how their pathway towards looking at decarbonization, and they are not avoiding their bit of what they wanted to do. I think that's one kind of a criticism you always get it. And the companies are coming forward with the plans, and that plans clearly shows that they are doing all their best effort to do what they can, and then they are looking at compensate or contribute or offset, whatever you call that as. I think more in terms of the claims, I do not know if Mark is somewhere around in this light, I couldn't see. I think one of the things is to see like where the mitigation contribution units like originally started was an unaccounted unit, right? Like that's where you ask for origination and then it turns the name into mitigation contribution units. The main purpose is that like even when you come in carbon markets or even for voluntary purposes, people say we would like to see accounted units to be used even for your voluntary action, right? So to me, like who builds the cat? It's the government in the end. They are taking a negative environmental debt on their emissions. It's easy to ask that get us an accounted units. So I think the foundation or the philosophy of calling what contribution is, and I think the mitigation contribution units provide that clarity, I believe, is that you retain the reduction, the rights of the reduction with the host party, and you get claimed for helping those countries to bend their curve in terms of reducing their emissions. The moment you call yourself as being climate neutral, carbon neutral, net positive, whatever you want to call it as, but I think the international community should also start recognizing of your contribution towards that claim of contributing in helping the countries in the global south. I think Ravi talked about the 30% higher impact. So you're basically helping the countries that are growing to move towards a sustainable pathway, while you don't constrain them by giving you an authorization where they have to take a commitment, but rather help them in bending those curves, and you get claimed or you get credited for helping those countries reducing those emissions. I think possibly we should start looking at how do we call these different contributions as even through the financial contribution. Maybe you can set every company which Peter is working on, like it's quite clear that everybody has their internal cost of carbon. So you know that as part of your internal cost of carbon, declare that this is what the contribution that I'm making for this country to reduce, because I know that I'm not claiming myself to be clean, green, and good, but I'm helping a country that has to develop. I'm providing that necessary finance flowing in. I think that's where I think the demand would come up, and I think even in the voluntary scale, like we are basically seeing where, of course, I would be talking always about PACM. So you would be seeing that there's a general tendency towards how even within the PACM and the MCUs can contribute towards the pathway between Baku-Belem pathway of 1.3.
Short, if I can summarize what you're saying, the role of MCUs and actually any credit for that matter without an authorization from a country can contribute to the host country's NDC achievement. Now, Peter, if I could turn to you, having heard the arguments put forward, is that something that you think could potentially debunk or demystify a lot of the confusion around the vernacular of the demand side and could help scale demand?
No, I mean, my point is another one. I think, I represent an organization that works on sustainability, and I've come to the realization that's a bubble. And in our bubble, we're very comfortable talking about all this stuff, but we are completely losing the battle. Then if you talk about carbon removals, carbon markets, you're a smaller bubble within that bubble, and you're talking at a technical level that nobody understands. So I think if this is the season's audience of carbon markets, we need to put out a collective effort to severely simplify what is the story. I think Ravi was completely right. A ton removed, whether it's reduction, removal, credit, nature-based credits, tech-based credits, I couldn't care less. It's a ton removed. We do not have the luxury of time to have these definitional debates. We know what standards we need to improve, what SBTI needs to do, and David Kennedy, the new CEO, is a godsend. If you meet him, if you listen to him, pragmatism comes to town, ideology goes home. That's what we need.
Very good. It's a nice segue to an interesting question from the audience. Maybe it's all about simplifying the market and maybe harmonizing. Do you see voluntary carbon markets being regulated eventually?
What is the goal of the Paris Agreement, right? The goal of the Paris Agreement is that in the longest run that we need to make as short as possible, every economy has everything under a cap, absolute reductions, every part of the economy, and every ton is known and being measured. The global trajectory has to be towards net zero. Governments need to understand their policy mix, and they can choose how to do that. And that might be enabling parts of their economy to have the voluntary carbon markets. It might be regulating markets and creating carbon pricing instruments and using, Article 6 type systems. In the shortest possible time, we have to get the whole of the world under economy-wide absolute caps, and then stay at net zero through removals and through other ways of staying at managing where we are still emitting. So, will the voluntary carbon market be regulated? The voluntary carbon market is already regulated in millions of different ways: consumer protection, tax codes, disclosure rules. It's not a problem. It's enabling regulation, funneling regulation, incentive regulation. All of these are normal parts of achieving what is a mission-driven market to scale action and unlock private finance. So, yes, it's already being regulated. Will it be regulated more, enabled, incentivized, given a slot, not given a slot? Yeah, and that's all normal parts of a market playing its part in a policy mix.
Great. Now, so you talked about regulations. I want to be a bit more specific. Would regulations help in terms of providing air cover for corporates to use carbon credits?
Yeah, I mean, right now we're trying to create scale, right? Right now we're trying to scale action, get carbon markets to help companies step off nothing onto something, do something, decarbonize. It's indefensible to no longer be acting. And what we're seeing is, really helpful in enabling regulation. The UK has come out with a consultation, for example, where it says it has a nature and carbon markets framework. It's looking to endorse ICVCM, VCMI, create and enable environment. We see the French charter where companies are saying, we're going to buy CCP labeled credits, 6.4 credits. So where governments want to enable and give, as you say, air cover or wing cover, whatever we want to call it, to corporates, that's regulation too, in a way. Endorsements, are the first part of that journey. And all of that is really positive if you actually are just trying to incentivize, enable, and help companies to meet targets, set targets.
Right, so I'll move on to the next question. How will today's protectionism and trade dispute impact future carbon markets? Will we see a more fragmented carbon ecosystem? And actually, I'd love to hear your views because you interact with quite a number of different buyers and also operate in different markets. So how do you see the market evolving in future?
Yeah, it's a great question, and I suppose there's quite a lot of uncertainty still. So far, I mean, we are seeing, thank goodness, a sort of residual commitment from both investors and buyers that seems to be weathering the storm. Now, that's a fairly small group of investors and buyers, and we definitely need that to grow, and this environment is not going to facilitate that in the near term. But do we see the tariffs and this sort of trade knocking on? Probably not so much. I mean, there is already, some protectionist initiatives in the market. I mean, some would argue the CBAM is a protectionist mechanism in itself, depending if you don't allow the importation of goods coupled with low cost of production, negative carbon tons, then that effectively works as a protectionist mechanism. So I think that the fragmentation of the global economy is definitely not going to help with what we need, which is convergence of carbon markets across compliance and voluntary. I mean, at the end of the day, we need to consolidate demand and we need to get more capital into projects for more action. So it's not going to push us in the right direction. Hopefully the relatively small consolidated set of thematically committed investors, buyers, and ecosystem participants is here to weather the storm, because this is a long-term play. I mean, we need it to outlive, 4-year political terms. We have to have our eyes on the prize, which is a multi-generational really problem we have to solve.
Yeah, same thing about uncertainty. I think two big things are likely to happen. One, it's not helpful from a company board point of view. It's a distraction that puts time out for talking about these type of topics. The other thing, though, is I think it will fundamentally reshape global trade. That means it will engineer supply chains, and it gives a big opportunity to make these new supply chains step forward towards decarbonized solutions. I think the other thing is the Scope 3 focus that is now really rapidly spreading. The understanding that the majority of your emissions are not in your own shop, but in other parts of your chain, that will completely make clear how difficult it actually is to reduce emissions if you do not control them yourself. That will, certainly for the intermediate part, be a massive incentive for companies to get into removals in carbon markets.
Excellent. Again, I think we are seeing quite a common thread here. If abatement is actually demonstrated, doesn't really matter, reductions or removals. We've got 3 minutes left. I thought this final question from the audience is quite apt in terms of closing messages and interventions from the panelists. Now, what are some of the practical moves that you will give to companies, NGOs, and governments working in the carbon market space to make progress? Anyone?
I can start on the government side, since that's where quite a lot of our interaction is. I think the advice to the governments is to look at carbon markets in the broader area of the NDC itself, its implementation, and define a clear role for it and recognize that this is not a silver bullet. It's not going to help you implement 70% of your NDC, but to recognize that it's an important part of bringing in private capital for NDC implementation in cases where it's destined for the voluntary market versus enter into partnerships for increasing the ambition of your NDC through corresponding adjustment, to recognize that there are two different use cases for the carbon credits, and that's all you have to worry about, whether you authorize or not authorize. That's the advice that is needed to the host government, because they are totally confused by this whole range of terminologies and so on. The simple thing is, you just have to decide whether you're going to adjust, add to your NDC, take on a public liability at a higher marginal cost, versus you come contribute to the implementation of my NDC through CCP label, Article 6.4, doesn't matter. And that, I think, simplicity that I think we've all tend to lose by going into details, I think is what is urgently needed. That just, and the second thing would be that it's not as if, if you do a 10 million ton pilot, you're going to compromise your NDC as Indonesia. If that 10 million ton is going to be in the way of implementation of the NDC, you're in trouble anyway. Reality is that you could do 20, 30 million ton pilots to learn from that experience, promote the carbon market, and at the same time diversify your policy instruments, rather than to agonize over whether I'll meet my NDC or not because of a 1 million ton corresponding adjustment. Which NDC is going to suffer from, except a small country like Bhutan? Maybe if they provide corresponding adjustment for 5 million tons, then there may be a problem. But for most countries, just do a pilot based on your NDC, say 10% of your NDC, you look at, and let's move. This is like overcoming paralysis. Now let's move.
Leaving the team. Anyone else? Amy? I'll go Amy, Perumal, Scobie, and then we'll end off with Peter.
I'll try to be quick, because it's flashing red, which is probably bad.
It's about to explode.
Carbon markets are mission-driven, so practical moves involve getting corporates to understand the context of the policy frameworks their countries are trying to implement, and getting that communication between corporates wanting to have real strong criticism-proof incentives to act, talking to their regulators to get that framework clear for them so that they have that wing cover, and helping that dialogue between governments trying to understand what an NDC requires of them and can also then be delivered through their corporates. So, you know, if you're a corporate, you need to understand what your government is thinking about delivering on its NDC. And if you're a government, you need to be listening to your corporates about the spaces they can see mitigation happening and enabling them to take those moves so that we can unlock this is about mitigation that doesn't otherwise happen and finance that doesn't otherwise flow. And so you have to have those government corporate conversations.
Excellent. Perumal?
No, I think like it's all leads back to what others are saying, right? Like in terms of having engagement both vertically and laterally in terms of your conversation with different stakeholder groups, making sure that your country, both the country is clarified on what and which types you are going to make eligible, whether to be used, and that's what's part of your, of course we don't like this term, we often used to say inside NDC and outside of NDC. For a very long time we moved from that concept, but in the end we are going back to the same thing, the country to identify which one they are willing to engage in international cooperation, which they wanted to keep it for themselves, which they wanted to have to be used for their domestic systems, which they wanted to go for international but without any obligations to themselves. I think this clarity is what is needed, and I think in terms of what practically could be done, I think most mechanisms today, including that of the PACM, have this opportunity of continuous stakeholder engagement processes. So that I would say in terms of NGOs and others to look at those lists and have the conversation. Only 20 countries so far has identified whether you call it as a white list, green list, or a positive list. And it's a requirement with 120 countries that have already identified their national authorities to participate in Article 6.4 with 1,300 projects, new projects, not old, I'm not talking about transition projects from the previous mechanism, which have indicated interest to participate, comes from more than 80 countries, and only 20 countries do have that clarity in terms of where they wanted to engage. So this is where I think the practical step is to have that conversation and dialogue, get the national framework done, and look at what are the opportunities that exist is what I would say to go forward with.
Great. Scobie?
Yeah, I think just giving a private sector perspective on it, I think we've got to do 4 things. I think we've got to crystallize obligations. So that means eventually we need compliance and voluntary to converge. But I think we've got to encourage leaders in business to think about being good stewards of their business. Eventually, somewhere or another, the emissions in their business are going to end up on their balance sheet. So we've got to think that this is going to crystallize and they should think about hedging that risk now. Second thing, we've got to simplify it. It's way too complex, to Peter's point. Like, just make it easy to make buying decisions, right? Like, the business leaders don't care what you call it. They want to know, how can I be a good steward of my business and protect us from future exposure and do the right thing? I think third, we need to really think about cost. And this is a forgotten dimension of the removals and avoidance dialogue, but we do ecosystem restoration projects, removals. They're relatively expensive. Tech removals, extremely expensive. We need it all, but we also need avoidance because, you know, if you look at the emissions to earnings profile of the people that are propping up the market at the moment, it's very, very low emissions to earnings profile. Look at the big tech companies. But if you try to crowd in people from steel or aviation or something else, you have a completely different equation, right, in terms of emissions to earnings profile. And so we need to create affordability as we try to crowd people into this system. And then I think the fourth thing is we need to create investability, and that's where we're trying to come in and create investable asset class. The other dimension of that needs more discussion in the market is, do we need to flatten the curve a bit? Because what we see is, if I'm doing a nature-based removals project, cash flows from that are very, very back-ended. You know, native species forests regrow slowly. So your IRRs are really under pressure. It means you've either got to have a very, very high carbon price, you know, and if you look at some of the carbon prices from MSCI, Conservation AER, it's above $100 past 2040. What we probably need to do is talk about changing the curve, manually changing the curve. So we bring the curve up at the front and down at the back a bit. What does that do? It means investor IRRs, people that are actually putting money at risk into these projects, are getting support on hitting their IRR hurdles. It means the buyers have less sticker shock at the back end of the curve, but are propping up the front end a little bit. The developers probably take a bit of a hit on the NPV because the weighted average tonne that we achieve in selling tonnes is lower. But at the end of the day, these are the sorts of things that we need to do to unlock. So for me, those 4 things will help us to get momentum in the market.
Thank you. Very clear from project developers' perspective. And finally, Peter.
Yeah, we need to keep it super simple. You know, there's no net zero world without carbon removals and carbon markets. There's also no possibility to adapt to the world that is 3 degrees warming. Systems will collapse, there is no business. So what that means for business, we need transition plans that do 3 things. What is the physical risk in your supply chain? Because those are much nearer than most businesses realize. What are your opportunities to invest in reduction or removal? Lay them out. What is your CapEx plan? Where is that money going? And the third one is, what are the solutions that you can bring to the market so that elsewhere reductions can occur? And when you have that plan, publish it and be held accountable in the years to come.
Sounds simple. So that's it. Thank you, and please join me in thanking our panelists.